We're looking at the Euro-US dollar and its reaction to the Chicago PMI, which on this day contracted considerably. PMI meaning Purchasing Managers Index, and it's also a leading indicator for what could be expected the next time that the ISM data is released. The National Association of Purchasing Management in Chicago compiles a survey and a composite diffusion index of business conditions specific to the Chicago area. It is comprised of manufacturing and non-manufacturing firms whom are both surveyed, but until recently market players have believed that the survey primarily covers the manufacturing sector. Any reading above 50% indicates an expanding business sector. The NAPM Chicago is considered a leading indicator, of course, of the ISM Manufacturing Index, which is a key economic indicator. Now on this day we see, first I want you to look at the movement of the NAPM Chicago. We actually see down here where the market has actually moved below 50%, which is a result of today's figure. The forecast was 61%, but on this day it fell actually all the way down to 49.2%, as indicated here on this graph. Beside it we have real GDP growth, and which was announced today, and the forecast was for 3.5%, and the actual is 3.3%, so we have a bit of a double whammy happening on the US dollar, potentially, where both the PMI and the GDP were below expectations. And here we see the movement of US real GDP growth over a period from 2000 all the way to late 2005, and here we see a slight decline. Here is a chart of the activity for the day. Now this is the day on which the data was released, and we actually see a bit of a head and shoulders pattern down here, and this is in fact where and when the news was released, was at this time, and we see a significant rally in the euro and selling of US dollars as a result of the negative data that was released. The market is really still very much focused at this time on the Fed raising rates, and of course during the time that this shot was taken, hurricanes were an issue, and they were really, what the hurricanes have done is they've caused economists to revise downwards the Q4 GDP forecast for the period, because obviously there's not going to be as much production as a result of the disasters caused by the hurricanes. So in this way you'll also see the Fed funds futures contract will also begin to price out any potential rate hike, and the Fed funds futures contracts are detailed in your manual that has come with your Econoday calendar.